So let's get into it. We have some things to discuss today. There are some really interesting things happening on the market. So we would definitely jump on a few topics. But before, guys, please, I'm going to give it a minute so everyone can read the risk disclaimer. So before we go ahead. All right, so let's get it started. Hopefully everyone have a read through it. What will we look in today? Good question, right? So I've separated two topics, all right? Keep it very short and easy so everyone can understand. But pretty much we're going to be looking at ECB. So what can we expect from ECB today? We have ECB in probably 5 hours or 4 hours, something like that. We're going to have a look at soon. And how to trade the ECB rate decision. What we can trade from ECB rate decision. Is the rate decision important? It's not important, or should we trade long? Should we trade short? So let's have a look into it, and then answer the questions as always we do. Of course, you guys can send me questions during the webinar. I will read through it as well. Okay, right. So let's get it started. Let me bring my other screen to here. Perfect. So FinLogix is the go-to tool. I always use FinLogix. I'm always using it for, for economic calendar and charting tools as well. So let's have a look at economic calendar. Okay. So I just want to the euro area. So let me unselect United States and any other O, and then today, and then we have Australia time. Yeah, 5:40. That's strange. That should be this time. Let me reload. Oh, there you go. Now it's 5:40. That's not right. Let me check another website so just we don't go any further wrong. Yeah, we're gonna have 11:15 is the ECB interest rates decision. I'm not too sure why Australia, Brisbane should be, I don't know why it's wrong, but I will message my team so they can have a look into it. Australia, Perth, it's going to be the same thing. Yeah. So very strange why it's showing 2:40 a.m. when it's not 2:40 a.m. It's actually 11:15 p.m. Okay. So 11 p.m. at the night. All right. So we're going to have forecasted 25 basis point. We can look at any other website. So let me just look at investing.com in this stage, because something is not happening here. So Canberra, Melbourne, Sydney. There we go. We're going to have CPI, of course, 8 p.m. as well. And most importantly, at 11:15 p.m., we're going to have the deposit facility rate. And of course, the interest rates decision at 11:15. So expected to have 25 basis point cut. Okay, so from here we can see 25 basis point cut. And I was chatting with some analysts, some other analysts as well, and it was pretty much saying that it was 95% of the market is already priced in a 25 basis points cut from the ECB. So it's pretty much a done deal. And to be honest with everyone, 95% of the market expecting it already. Of course, it can happen the complete opposite, as we've seen it. As we've seen it from other days. We've seen some market participants specifying a 25 and then it happens a 50. or pressifying a 15-year, then doesn't happen anything. So there is definitely to watch out with these. Okay, don't get fooled by a friend told me that, a neighbor who told me that. No, do your own research always. Okay, because it's good to have conversations. I love to be here with you guys, to be honest. It's a very nice time where I can share my analysis with everyone and etc. What I've been working on and etc. But do your own analysis as well. It's always good to go and search it up for your own. All right. So deposit facility rate, ECB marginal lending, and then interest rates decision expected to be 25 basis points cut. And we are looking at CPI as well. Okay. We have core CPI and then the normal CPI. One thing I want to bring attention here, okay, is that 11:45 p.m., right at the end here, we're going to have the press conference. All right. And the press conference is very, very important. If I stop talking, it's just because I'm drinking coffee. Tonight's going to be pretty hectic, as everyone can see. So ECB press conference is going to be even important than the actual interest rate decision. Why is that? Well, first of all, if 95% of the market is already pricifying a 25 basis point cut, that means it's sort of a done deal, right? Now, let's have a look at Europe 10-year bonds. I forgot to left it open again, but where is it? There we go. Maybe the 2-year is better. Yeah, perfect. Okay. Let me put in a 15-minute chart. We can see that the 10-year bond have been dropping, okay? It hasn't dropped that much, but we can see from the top to the bottom, right, where it is, right here. It's a 6% drop, okay? And out here, it's 5.5%, okay? So consecutively, for the month of October, we're still up. October, somewhere around here. To here, we're still 5% up. But it has been priced in a sense because we can see the decline right here. Okay, we can see this coming down. So yes, I believe it is priced in a 25 basis point cut from ECB tonight. All right. Now, where is my other part? There we go. And the second part we're going to be looking at is how to trade the ECB rate decision. Should we trade? Oh, very cool, right? Look at Brent prices, where I told everyone that the price would come back when it was somewhere here. That's a very nice trade right there. Okay, euro dollar. So should we trade on euro dollar, right? Or should we trade on euro pound? It's another opportunity as well. Sorry, euro pound. There we go. Should we trade on euro pound? This is because the CPI we've had. Should we trade in, let's say, euro CAD? It's another good opportunity as well. How should we make our exposure? Right, and this is what we're going to be looking as well today. All right, we got some questions already. Sweet says, which of the euro bond is advised to always track for further confidence in terms of technical and fundamental analysis? That's a really good question. It depends. Okay. First of all, do you know what's actually is a bond? I'm assuming you probably know what a bond is, right? So if you don't know, I can very quickly explain you. But anyways, so basically I like to use the 2 years and the 10 years. It just depends for what reasons are you using them. So to track rates, I prefer to use the 2 years and the 10 years. if you looking to have how can I strength or weakness of the currency. So in this case, we can do something really cool. Is that we can use the DXY, that is the US dollar index, because the DXY. So let me add DXY on top of this chart, new price scale, and let me change for candles to a line chart. We can see that it's pretty much exactly same thing, right? Most of the times is the same thing. So we can see here that it was walking. Just go. I wanna. Okay. Perfect. All right. We can see that the majority of the time, let's say 80, 75, 80% of the time is doing pretty much a similar movement, okay? At least on this very small sample of data that we can actually visualize it in front of our eyes, we can see that majority of the time is touching each other, okay? And when it's not, when it's like the green, the um, pink here is going up. So when the US dollar index is going up, we can see that the Eurobond is going down. But every time Eurobond goes down and Euro and US dollar goes up, US dollar has a massively sharp back up. So then they can meet each other together somewhere around the chart, right? And it's exactly what is happening right here. So we're seeing the spread between the DXY, okay, that is this big boy here, between the Euro 10 year bonds, that is this boy here, we can see that there is a big spread between them, okay? And this is pretty much showing to us that there is a convergency now happening on the market. And what happens on convergencies? We can see this on a bigger time frame per hour. Just zoom out, not too much. Okay. Okay, like that. Okay, so we can see that there is a correlation between them, and every time that they get out from each other. So let's say right here. Okay, so both of them were rallying, and then both of them got down, and then now they're pretty much together. But there is a consistency of that the Euro 10-year bonds are dropping, and then US dollar is going higher. How high it can go, it can probably come here, and then they can probably meet up together somewhere around the chart again. So that is showing to us that yes, euro dollar can potentially continue to go lower and then continue to, and then do a reversal to go higher, maybe to levels that we have to see, right? We have to do technical analysis. Now, did I answer your question, or is still a bit unclear? Just let me know so then we can move on. Okay, cool. That's good then. Let me take all of these drawings off and come back to here. All right. So let's go to ECB website. Very quick. Oops, sorry, wrong one. There we go. Okay. So on here, click on monetary policy and markets, and then go to monetary policy decisions, statements, and accounts, and then just don't accept. And then go to monetary policy decisions and open on a new tab, and then click on monetary policy statements. So here we have both of them, exactly what we need, all right? So we need the monetary policy statements, and we need the monetary policy decisions. Now, What we're gonna pretty much do now is we're gonna have a look at what they've said on the previous. Oopsie, sorry. Oh gosh. Oh no. Get out. What they said on the previous ones. That is from last month of September, and what we can expect looking at. Look at what the data we're having, okay? So let's click on this monetary policy statement here, Christine Lagarde, 12th of September, and let's click on monetary policy decision from 12th of September as well. Now, we have two things here, and what is most important right now for the press conference is this little tool here. Jump to the transcript of the question and answers. So this is gold. Okay, this is really, really good because right here we have the first question. So first question is, when they open to someone ask the questions, these get transcribed, of course. So this is the first question. Because this we can just watch the video. It doesn't make much sense to us. Okay, it's just like literally she's saying why she did, and etc. etc. So here's the gold. So I have a question on the decision to cut by 25 basis points versus 50 basis points. Why did you go for 25? And my second question is, looking into the future, given that the Fed is going to start to cut, the macroeconomic picture is gloomier than before. Inflation is coming back. Is the market right to anticipate that you cut another 50 basis points by the end of the year? See, right here, we already have an answer. So we have the question that someone have asked Lagarde, and we're going to have a look at what she answered right now. So on your question about our decision, we decided to cut the deposit rate by 25 basis points, and that was an unanimous decision. So pretty much everyone on the committee has voted for it. We proceed as we normally do and have very clearly indicated by obviously looking at the data and looking in particular at data through the prism of all three key criteria. So when you look at the incoming information, it confirms our previous projection and it comforts us in our confidence that we are heading towards our target in a timely manner. During the course of 2025 in particular, inflation will decline towards our 2% target. And we thought that given the gradual disinflationary process, it was perfectly appropriate to moderate the degree of monetary policy restriction by cutting a deposit facility rate, which I will call the DFR, if you don't mind from now on, by 25 basis points. When I say that we look at all the information that we got, that we get on the occasion of a projection exercise through all three prisms, I'm referring obviously to the inflation outlook, underlying inflation, and transmission of monetary policy. Okay, on the inflation outlook, when we receive the projections of our staffs for September, it's virtually unchanged relative to June for the inflation outlook. And it continues to see a return to 2% at the end of 2025. And this is, by the way, the fifth consecutive projection exercise pointing to the 2% at the end of 2025. Why do I say that? Because it certainly reinforces our confidence in the solidity and robustness of those projections. That's for the first prism, the inflation outlook. For the underlying inflation, on the other hand, we look at various indicators that we have from domestic inflation of PCCI, that is the permanent and common component of inflation. And here we see one particular indicator, the domestic indicator, which is abating a little bit because it moved from 4.5% to 4.4%. Between June and July. Okay, now, what she just said is that inflation is returning to target as really, really quick, and they are expecting to 2025 inflation declines toward the 2% target. Let's have a look at what is the inflation of Europe right now. Oops. So the euro area annual inflation rate was 2.2% in August 2024, down from 2.6% in July. A year earlier, the rate was 5.2%. European Union annual inflation was 2.4% in August 2024, down from 2.8% in July. So they are pretty much at 2.2% inflation. But this is the normal inflation, okay? We need to understand that we have the core inflation as well. The core inflation rate is at 3%, and that was compared to 3% last month. Okay, so pretty much no changes on the actual core inflation. Okay, so if we look down further, now this is the very good part. We're not going to be fixated on a single number. We are looking at a whole battery of indicators. And I'm saying that in particular because September will certainly deliver a low reading of inflation. And here we have the answer. Okay, so if we come back to the economic calendar, where it is, there we go. Your inflation. Let me just put it low. It is on Thursday. There we go. So they are expecting the core inflation rate year over year final from 2.8% to be 2.7%. And the month over month expected to be from 0.1% to negative 0.1%. That's pretty good. The inflation rate year over year, the normal inflation, from 2.2 to 1.8%. Now, this will be really, really important, okay? Because if this doesn't happen, then she compromised herself because she already saying, I'm saying that in particular because September will certainly, she actually used the word certainly, okay, deliver a low reading of inflation. Very likely. We expect, because of the base effect, particularly on energy or inflation numbers, to be up in the fourth quarter. So the last 3 months of 2024. But September is going to deliver a low reading. But we are not just looking at one indicator. We're looking at a whole range of data that we receive. Right. So for the inflation data, we can already expect somewhere, because if we look to the forecast, okay, forecast is at 0.1%, negative 0.1%, and 2.7% and 1.8%. This is already down from the previous. If we look at previously, the year-over-year core inflation coming down from 2.7 to now forecasted to be coming down from 2.8 now to 2.7. This is already something that it's lower than, lower than the previous, because she haven't mentioned how much lower it will be. Okay, so just making sure everyone understands this part. But she's mentioned that was lower. The negative 0.1% is the big take, because most likely we will have negative. But if we don't have negative, then we may see a stronger euro. If we have more than that, so if we have, like, let's say negative 0.1, negative 0.2, this will be much more weakening the euro than actually the negative 0.1 only. Okay, and the 1.8 as well, right? The 1.8 at 2.2% from 2.2%. There is definitely a scenario over there. Okay, the next question that I find really interesting The October meeting is a short 5 weeks away. To use your own words from March, do you think you will know a lot more or just a little more come 17th of October, that is today? So my second question is about something else. It's about something that the ECB has been championing for years, and this is a cross-border consolidation between banks. It seems to finally happening. So this doesn't matter. Just the first question matters to us. Okay. So let's have a look on here. On first question, we can all count. It's 5 weeks before 17, which is a relatively short period of time compared with other intervals that we've had in the past. I would simply repeat what I've said. We are going to be data dependent. And that's another answer, okay? And we know it's so simple. It's literally really, really simple. It's people don't like to read. If you guys take some time during your week and come to websites like the actual central bank website or etc., you will be able to understand much more than only watching like YouTube tutorials on how to do this or that. Reading and interpreting it will help you a lot. Okay. And that, as you say, so we are going to be data dependent. We are going to decide meeting by meeting. I'm not giving you any commitment of any kind as far as that particular date is concerned. And our path is not predetermined at all. Okay. And the other matter that you refer to, yeah, typically, so she starts to answer about the bank's border consolidation. Okay, so this is pretty much very important to us. She has been data dependent, and she will continue to be data dependent, and most likely we will see a 25 basis point. Why? Because we will be able to understand she's already predicting that the month of September to be lower inflation, so to have a lower reading on inflation, and to be data dependent. So if the data is inflation, as she mentioned it, we will continue to see another 25 basis point. Okay. That's question. This question is really good as well. You say again that the rates need to be sufficiently restrictive sometime. How many times can the ECB cut interest rates before they are no longer sufficiently restrictive? Where do you see the so-called neutral rate? Okay, so I'm going to spend a bit more time on your second question, because on the first one, how long we are going to be sufficiently restrictive? Until we have been sufficiently restrictive. That was a good one. Because what we want, there is a typo error here. Because what we want is to achieve the goal of returning inflation to target in a timely manner. As I say, for the fifth projection exercise, we have inflation at target during the second half of 2025. And that is on the basis of the baseline that we have in our projection. And we're going to observe how the baseline evolves over the course of time as data come in to decide for how long we have to continue cutting rates and at what point we have been sufficiently restricted. So I'm not going to give you any ideas what to where are. So this is rate. So you an idea as where the rate is, because this is an unobservable concept anyway. And as we get closer to it, we will know certainly better. As you probably know, the staff have produced a very good paper on return on rates, which indicates that it's probably a tad higher than where it used to be. But I'm not endorsing this. As I say, we get closer to it, we will know better whether we are there. And there are multiple factors that we are going to have an impact on that. So Again, she's very data dependent, and I think that's enough for us to see that if we have a lower rating, we're going to have data continue to have data dependent, and therefore we will have a 25 basis points cut. And it's not only me that is thinking that. There is some other analysts already on the trading floor thinking about it as well. So there is opportunity, okay? So if inflation comes lower and they do a 25 base points cut, what will actually matter then? So this is a scenario, okay? The scenario is if inflation come lower, good. And if the ECB do a 25 base points cut, perfect. Now, the most important part is actually the press conference, okay? So the press conference is the most important part. And most likely, we will continue to see Lagarde very data dependent. So if we come back at the rate decision, what day was it? On the 17th? No. 12th of September. So if we come to 12th of September in euro dollar, let's have a look at what happened. 12th of September. There we go. Right. Put a line. So we can see that what happened was bullish. So we can probably see something like that happening today as well. But because it will be very, very similar of what she's, I'm looking at as a very, very similar scenario from last month in September. So this is why I'm looking back and thinking, okay, this can actually happen again because she will be data dependent. She won't do a 50, she will do a 25. And the inflation is coming lower. So yes, it is good, same as the projection. Now, we're probably going to get a pullback somewhere like this, but if we look at the chart, what we have right here is a beautiful box. There is a possibility of the price coming to this little, tapping it here, and then coming back. So maybe we can somewhere do this. Somewhere on here, maybe. Yeah, so this is my view to euro dollar. So I'm closing all my shorts now. I won't let it go for much more. And that's exactly what I'm looking at the moment. Now, second scenario, if the market continues to go lower and we break this bottom, if we break this bottom, then my target will be down here, but I won't be looking to trade euro dollar anymore. Okay, because if we break through here, well, it depends. We're going to see next week on Tuesday on the webinar. If we break the bottom right there, and we can continue to go, some indication of continue to go lower, then yes, of course, it would be looking good to short. But what will matters the most is the risk side of the things. If it's actually rewardable, if it's actually if it's a good risk to reward trade. Otherwise, it won't make any sense, right? Because it's going to be negative risk, okay? Because we don't have much to fall So if we break through here, we will only have this. So we need at least a pullback to the price somewhere here to short and have at least a 1 to 2. So that's a very, how can I say, risk trade for the short side, right? Because if we look, we don't have much things left, okay? This is all taken. No, we only have this one and this one, these two. Oh, at least in my strategy, all right? So my opinion is bullish. I'm bullish on euro dollar. I've swapped my perspective. And I believe we can have some pullback. Okay. Now, how big this can pullback happen? That's a really good question. And I reckon we would need some more data. So let's just right through here. So if we see, let's say we throw a broke down here, we actually get a breakthrough on this stop. All right, this thing, we can use Fibonacci right here. Trend base extension, 1, 2, 3. And then like this. So the extension would pretty much be like that. Okay. So yes, first take profit here, and probably would carry these to somewhere here, and even somewhere here. Okay, somewhere around these two levels. But this is going to be really, really hard to get such a big retracement. So I think euro dollar, it is the best opportunity at the moment. Of course, managing the risk. But I reckon we're going to probably have a 25 basis points cut from ECB, a lower inflation. So this is what I'm thinking, because the inflation will come first. Will get released first. Okay. So there is a potential for euro dollar suffer from this, and the US dollar just gain a little bit, and then the institutions can buy it on a cheaper price as well. So looking at this scenario, most likely we can have a bullish euro dollar today. Okay. So Satish say, I think bullish euro dollar today, then euro dollar lower during PMI report, and also USD equation also there. Yes, we have the US dollar equation as well in there, but it's very hard to quantify the US dollar equation, because yes, US dollar can be weakening at the moment, but it could potentially get the strength from somewhere. And then, we lose that potential. But now, another thing that I was meant to say to you guys is, if we look at the economic calendar for euro, US dollar, USA, we can see that we're going to have, ready? Can't find it now. Oh, yeah, here we go. So we have the retail sales, and we have the continued jobless claims. Sorry, the initial jobless claims for the month of October. And I was thinking, due to the hurricane, the tragedy that is happening on USA, we may have people laid out. So therefore, these have a potential to have a lower initial jobless claim, a higher initial jobless claim and a lower US dollar. Okay. So, and for retail sales, yes, most likely we will have some sort of higher retail sales. All right, guys. Thank you so much. So we've covered pretty much everything. So what to expect from ECB today, a 25 basis point cut, and how to trade the ECB rate decision. Most likely we will continue to have a neutral to dovish instance. So this will weaken the euro dollar at first and then strengthening it later, most likely. Okay. So hopefully you guys can have a good trades. If you have any questions, please send me through the Telegram, and I see you in the next week. Thank you so much. Have all a great weekend, and we come to an end. Thank you, guys. Not a problem, sweets. All good, my friend. Have all a great weekend. See you Tuesday, guys. Bye-bye.